Bandhan Mutual Fund presents MF Corner.
Hello and welcome to the special Mutual Fund Corner YouTube edition. And you know, the month of April has been seeing a lot of NFOs, but that has been the story over the last couple of months already. So should you invest here? What should your strategy be? And which are the good ones that we are seeing in different categories? Let's get in Abhishek Kumar, founder and SEBI registered investment advisor from Sahaj Money. Abhishek, thank you so much for joining us. And the interest in NFO is not dying, be it an existing category, be it an existing fund house, and there are so many new fund houses as well. So there are around 8 NFOs coming out in the month of April. What is your take on NFOs in general?
First of all, Sonal, thanks for having me again. I had a session before as well with you. Looking forward to this exciting session as well. So my take on NFOs is same as what Warren Buffett once said with regard to space exploration. We appreciate the endeavor, but we're going to skip the ride. I would wait for fund to perform consistently for some period of time before recommending it to anybody. Having said that, the market is such that market has done reasonably well in the past period. And looking at the excitement of retail investors, fund houses are trying to tap into this, let's say, euphoria by launching new funds, sometime as a theme, sometime into a sector. So this is what we are seeing, what is happening in the market right now.
Okay, so that's about NFOs. Now there is a Tata Nifty Realty Fund. It's about the realty sector, an index fund. But you've seen so much run up in the realty space already. Do you think sectoral funds are something that one should look at?
You said it yourself, Sonal. Based on recent performance of realty sector in recent past, after a long time, the fund is trying to play catch up. Not sure how long this party would go on, and once the music stops, things could go down real quick. Realty sector, as you understand, I mean, since the great financial crisis did not do well for a long period of time, there was a lot of deleveraging which happened in the balance sheet of most of the real estate companies. Now that that has been said and done, I think things have started looking back for these realty companies, and that is shown in the performance in the recent past. But not sure whether this would continue for a long period of time, because at some point of time the market will level out, and when that happens, probably there would not be price correction, but say a lot of time correction, which I foresee in future.
Okay, so it's not prudent for an investor to go ahead and invest in this one?
I would suggest again, don't try to join the party when you're too late for it. Try to see on the sideline and invest in, not specific sectoral fund, but see how you can do your equity allocation on a regular basis in the funds which have already performed in the market or has a, let's say, performance record consistently.
Okay, let's go across to the next one, which is Trust Mutual Funds Flexi Cap Fund. It is the first equity fund that has come out from the AMC as well. How do you look at it? And are Flexi Cap funds gaining a lot of popularity? And is there a place where everyone says one should invest?
I personally like Flexi Capital as a category in active fund space, because Flexi Fund gives an opportunity to a fund manager without getting his one hand tied behind his back. So he or she has the flexibility of investing across market cap, sectors, themes, and I try to identify pockets where they can find value or further growth in future. So again, I still, but with this being a new fund, I will always look at the consistency of return before recommending it. So I would wait on the sideline for this fund to perform. This got good management as the, the fund house, let's say, fund managers have been reasonably one. But I mean, I would still, again, my first principle is to wait for, let's say, performance to come out and then recommend it to anybody.
You know, that's been the unanimous idea of any NFO, because you need past performance, at least some indication of past performance before you invest in something like that. The next one is Bandhan Innovation Fund. It talks about investing in companies that see higher innovation, and the lead period there could be higher. And we had that conversation with Bandhan AMC as well, and they said that these are good quality companies that they're investing in. Makes sense, but how should one go about it?
So what I did, I checked the scheme information document for this particular fund. It says that the fund would invest minimum of 80% of its assets in companies following innovation theme. To me, it's very vague. I mean, how do you identify those companies? Because if you read the management commentary, you will always find that innovation is a word which is being repeated. Whether that is reflected in, let's say, in their performance going forward, or they are innovative enough to, let's say, give this kind of opportunity to invest, that is very, very difficult to identify. So I'm not sure whether it's just a repackaging of the ideas. The growth companies anyway, they are doing some bit of innovation. So they would anyway be, kind of on the lookout for new ideas and all that. But innovation, unlike other themes like, let's say, reality fund or say, other sectoral fund or thematic fund, it's very vague an idea. So I'm not able to wrap my head around this.
Okay, so thematic funds in general, that is something that everyone says, unless you are a very experienced person in the market, do not start at least your investment journey with that. Abhishek, but what's your take on index funds in general? Because the NFOs in the month of April, they are largely dominated by index funds this time. How much should any investor allocate basis the risk profile, say a medium risk investor, low risk investor, or a very aggressive investor?
So I would again take you to the first principle of identify one's risk appetite. So depending on the category you just mentioned, you can, let's say for let's say conservative investor could look at, let's say, 10 to 20% of their allocation into, let's say their portion of the equity portfolio into index funds. Likewise, for a medium cat risk, let's say moderate risk kind of profile, one could look at 30 to 40% kind of allocation, and for an aggressive investor, let's say around 50% of their allocation into, let's say, index fund. I am a very, big proponent of index fund because these funds practically work for you for a very low fee, and you get the exposure to the top 30 or top 50 companies in the economy, depending on the kind of benchmark you are tracking by market cap. So it can't get better than this. Depending on the asset allocation based on one's risk appetite, I would always suggest some exposure into index fund. See the benefit. Because adjusted for let's say expense ratio, index fund are going to outperform market over a period of time. This has been reflected in the developed market, and sooner or later it's going to be reflecting in let's say developing market like ours. If you follow SPIVA report, it is reflecting in the past many years that this has been the case. In recent past, there has been some pocket of outperformance, but that is one of those years, I guess. This is the kind of market we are living in. But if you average it out, I think over a period of time, index funds are the way forward for an investor who doesn't want to, try too many or experiment with too many things and just want to get the market return.
Makes sense. Abhishek, thank you so much for your time again, explaining to us what the NFOs are looking like in the month of April. Hoping to speak to you very soon again, but that's it for today. So thanks a lot.
Thanks for having me again, and have a great day.
Okay, all right. With that, we'll take your leave on this edition of Mutual Fund Corner YouTube edition. Stay tuned for more news and updates.
Bandhan Mutual Fund presents MF Corner.